Many of us are aware of some of the tax benefits of owning a practice, but few of us know about the tax benefits of employing your children in your practice. My guest today provides tax, accounting, and business advice to her clients, and she's going to open our eyes about some of these tax benefits for the rest of us. I'm Carl White, principal at Mark Advisory Group, which is a healthcare marketing agency, and I'm also the host of Practice Care. The mission for both is the same, and that's to help private practice owners stay private. Usually that's what they want anyway. And care is better when the provider owns the practice because they get to call all the shots, clinical and business and otherwise. When it's all under one roof, the clinical side, things can be a lot better, a lot smoother. It's not always the same when somebody else owns the practice, whether it's owners in faraway lands, health systems, private equity, whoever. Eventually their agenda starts to creep in. And you know what? It just makes life a bit harder on the provider. Let's keep it simple and keep it private. My guest today is Alexis Gallati. Alexis is the founder and lead tax strategist at Cerebral Tax Advisors and Cerebral Wealth Academy, and she's the author of the book Advanced Tax Planning for Medical Professionals. She has over 20 years of experience in high-level strategic tax planning and multi-state tax preparation, and she's trained at the highest level, holding 2 master's degrees. Alexis grew up in a family of physicians and is married to a private practice physician. That's why she understands how hard medical professionals work to get where they are and why she provides simple and accessible tax solutions tailored to busy physicians. And our first three-peat guest, which is awesome. Alexis, thank you for coming on Practice Care again.
Thank you, Carl. I appreciate you having me again. Excited to
Yeah,
be here.
it's fun. These are like really important topics, but things that what I classify as nobody ever thinks about. And how can you ask about something that you've never heard of? So you bring a lot of valuable stuff that those of us who are not in the tax world never think about to our benefit. So I appreciate it. Um, you've been on 3 times. I just said that. However, plenty of listeners haven't heard of you before. So fill in the gaps in your bio. Help us get to know you a bit better.
Yeah, definitely. Yeah, I've been in the tax industry for over 20 years and I love saving money. I love saving taxes. I don't want
Do you
the
meet those who
IRS
don't? Like, what?
exactly.
I want to pay more in taxes this year. I mean, do you meet people who don't?
Yeah. Well, yeah, exactly. It all started me going out on my own because my husband, was finishing up residency and I saw the writing on the wall. I
Mhm,
knew I knew we were going to be going into a very different tax bracket. And so,
mhm,
well, why did the Warren Buffetts and the Bill Gates of the world get to have
mhm,
that low to non-existent sometimes tax bracket? And so
mhm.
that's where I really dedicated myself to finding those strategies. And we just with Cerebral just naturally and organically started working with medical professionals, just kind of the crowd we ran
Mhm.
with.
Right.
um, but yeah, so I've definitely, uh, always looking for different ways, legal ways, of course, always
Mhm,
using IRS proven strategies and
mhm.
happy to play in the gray areas, but just have to make sure you're comfortable defending it, of course.
Yeah,
Um,
tax law language is law language, legal. It's always so vague. Like it's,
yes.
and it's 5,000 pages per bill. And it's like, how can that all be that? Yeah. So, right. There's room to maneuver. Yes.
Definitely there is.
Yeah.
But yeah, again, it's all knowing what you can do, what you can't do using case law and
Mhm.
other IRS regulations to make sure you're in a good spot,
Right.
basically.
Right. Right. Right.
And kind of a good segue into our topic. I mean, that's where, hiring your kids, for example,
Mhm,
there's definitely some gray areas there.
mhm,
But overall, it's a very legal strategy and
mhm.
really helps you with saving
Yeah.
tax
Yeah.
and shifting your wealth to your kids.
Right. Which after listening to you and others over the course of a couple of years, I now do with my son. He helps out a bit. And yeah, and it's just like hiring anybody else, really. I mean, you have to hire somebody to get job X done. If your kid is qualified, why not? So, tax benefits of employing your kids. Let's start with some easier stuff. What are some of the more common tax benefits that you see
Yeah.
that you're aware of that you kind of, suggest to your clients?
Yeah. I mean, kind of the first obvious tax benefit is that your kid's salary is a business deduction.
Right.
So you're able to lower your taxable income coming from your practice.
Mm-hmm.
And essentially what you're doing, it's called income shifting. So you're shifting that income from your higher bracket, tax
Mm-hmm.
bracket,
Mm-hmm.
down to your kids, hopefully non-existent tax bracket.
Right. Because
So
what's the amount, the max federal amount in 2025 you can earn before you pay any tax? Do you know what that is? It's like 10 or 15,000 or
um
something like that, right?
yeah. So the standard deduction amount is 15,000. And
Mm,
so
there it is.
yeah, you can pay your child up to that amount before they would even have to owe any
Right.
tax.
Because when they file their
Um,
return, they deduct all that anyway. So there it's all wiped out. Yes.
exactly. Yeah.
Got it.
Yeah. So, by doing that, you're hopefully, if you're, obviously if you have like a teenager that might be having a job at Baskin Robbins or something like
Mm-hmm.
that, you have to factor in the salary from there
Sure.
into what you're paying them as well.
Mm-hmm.
Um, but again, you're taking it out of your pocket and putting it into your kid's pocket where
Mm-hmm.
hopefully they're not having to pay any tax.
Mm-hmm.
Um, so what's great about that is they're then earning an income, and that allows them to put that money into like a Roth IRA, into their
Right.
retirement.
Right.
So that's the big benefit. I employ my 4 children in my practice as
Mm-hmm.
well. And
Mm-hmm.
it really is a great way to pay, $7,000 is the max you can put into your Roth IRA for 2025.
Mm-hmm.
So I make sure to find jobs for my kids that they can each earn $7,000 a year.
Mm-hmm.
And now I've put that money into their Roth IRA
Yep.
where now it's going to grow
Tax-free
for like,
forever.
yes, exactly. It's going to grow tax free and then come out tax free
Yep.
once they hit retirement. So,
Yeah.
and that's easily, if you do that for, let's say, a 10-year period, just say it stays at 7,000. So it's $70,000. That's easily going to grow well over $2 million by the time that they reach into their 60s.
Tax-free forever. Yes. Yes, I know. In fact, we started doing that, and we did a little match for our kids. Like some companies do a match. We said, if you put in $500, we'll match a little bit too. And my son was like, "Really?" I'm like, "Yeah, really." It's great. So yeah, so that's an easy one. Employ them. Find. It's got to be like legitimate work. It's got to be loud, stuff that's really got to get done, right? I mean, you have
Exactly.
to. I mean, what? So what are the things to keep in mind if for listeners who are thinking they want to start doing this? Like, they actually have to do some job. Like, what are you have to pass some tests, right? Or at least some considerations.
Exactly. Yeah. Your
Mm-hmm.
kids have to be legitimate employees.
Mm-hmm.
So you have to put them on payroll. You have to
Mm-hmm.
go and keep timesheets. You have to have a job description for them. You have to pay
Mm-hmm.
them a reasonable salary.
Mm-hmm.
So if you were to go and hire somebody off the street to do admin work,
Mm-hmm.
so one of the main questions that I get from clients is, "Hey, what can I actually have my kid do?" And obviously depends
Yeah.
on their
Yeah.
age, et cetera. And we'll
Right.
talk about that a little bit more in a second. But if you were to hire somebody to do answering phones, well,
Mm-hmm.
you're probably looking at a minimum of, maybe $15 to $25, depending upon where you live in the country.
Sure.
So, you'll want to go and take a look and make sure that you have a nice description of, what they're doing. You can even use tools like Chat GPT to be like, "Hey, these are the things I want my kid to do," create a job description, and then you can just print
Perfect.
that out and put it
Yep.
into your file.
Mm-hmm.
Um, I've never had the IRS ask for it before, but
Yeah.
great to
Just in
have it there
case.
just in case,
Just in
along with an
case.
employment agreement as well. So you
Really?
want to, yes. So I definitely recommend, it doesn't hurt to have some sort of employment agreement. Obviously it's a minor child, so they can't like go and make it
Sign.
legal, but you can
Yeah.
write it, or you can sign it, or you can have your spouse sign it.
Mm-hmm.
Um, so then that way you have that in there.
Mm-hmm.
And knowing too, the laws in your state are important,
Mm-hmm.
especially if you do have children that are under considered working age, and that's usually like 14 or 16 depending upon the state.
Sure.
For federal purposes, there is an exception for those that work in family business. So you really don't have to worry about that. So you can have somebody that is younger. And
Okay.
most states, they follow the federal law, but sometimes there are like hour restrictions or
Sure.
types of jobs, so they can't do hazardous jobs like working in a construction site.
Okay. That makes sense.
But yeah, but overall, the court tested age is 7. So
Really?
yes, yes. So that's usually what I recommend is, wait until 7 years old to start, employing your children. And then you have, like I said, that nice 10-year period before they
Hmm.
turn 18 to put money into, their retirement.
So like sweep the floors, clean, like what do you, I guess you'd have to figure out. So the test is what would the work has to be legitimate. I should hire my child in the same, I guess, rigor that I'd hire somebody off the street, job description, documentation. But after that, then yeah, 7 years old. 7 years old. I'm wow.
There's a lot that 7-year-olds can do,
Yeah,
actually,
so
especially
there's
nowadays
yeah.
with technology and everything.
And there's case law
Um,
that says 7 years. When you say court tested, is that what you mean?
mhm. Correct. Yep, exactly.
Wow. Okay.
Yeah.
Um,
And so they're doing things like more admin type related
mhm,
jobs. So
mhm,
cleaning your office,
mhm,
filing things. I mean, I remember granted, I was a teenager at the time, but I was working in my dad's neurological practice, and
mhm.
I was good old paper files, before
Yeah, it's true.
electronic records came out, going and helping categorizing things and
Yeah,
alphabetizing, etc. Um, but for kids even younger nowadays, they're able to, stamp envelopes, they're able to scan receipts,
yeah.
they can even be on your computer. I have my 11-year-old, going and filing files on my computer that I've
Hmm.
saved to my desktop,
Hmm.
so that way, um, if you have also older children, um, they can be helping with, maybe you're having a customer appreciation
Hmm.
event or
Hmm.
something. They
Hmm.
can be helping with, marketing materials, going and handing
It's
those
true.
out.
Yeah.
They can be just helping to
Hmm.
um, get the party ready.
Yeah.
So you just kind of have to think outside the box
Yeah.
and be like, hey, what are some simple things with a little bit of direction that my
Yeah.
child can do?
It's true. And now you're making me think. I was a teenager. When I was a teenager, I worked at my father. He owned a pharmacy back when you could find independent pharmacies. I was pretty much the janitor. I cleaned everything. I hated it. But I mean, every freaking box you need, and there's a lot of stuff like, anyway, I did that. Yeah. And then I would work there summers and after school and um, don't have any IRA to show for it. Didn't think about that. I don't think anybody thought about that. But nevertheless, the point is made. So employing your kids, that's a really sort of a common one. Any other more on the common side before we get to some cool, uncommon ways of employing your children or, utilizing your children?
Well, one thing I do want to mention that's really great for those that have sole proprietorships or partnerships.
Okay.
So this does not apply if you have an S corporation or a C corporation. Is
Darn
that
it.
if you employ your children and you're in a sole proprietorship or partnership, then you don't have to pay Social Security and Medicare tax, any payroll tax on their wages.
Wow.
So it
Okay.
even saves you more tax.
Okay. Interesting. All right. So employing your kids. So just, employing them, figuring out what kind of, age appropriate work they could be doing. But there's more than meets the eye. What about some lesser known tax strategies, tax benefits?
Yeah. So another strategy that is a little bit different than employing your kids is
Hmm.
called the gift leaseback strategy.
Gift lease
And
back. Okay.
yep. And so essentially what this is, let's say you own a dental practice
Hmm.
and you have a lot of equipment.
Hmm.
Well, one thing that you can do is gift that equipment to your children, and then your children, put those assets into usually an LLC, where one thing that's great because you're going and separating that liability. So if someone were to sue, then they can't get after those pieces of equipment. So that's one
Okay.
benefit.
Okay.
But the other benefit is that then your children lease that equipment back to your practice,
Okay.
and then you're again shifting income from them, or sorry, from yourself, from your higher
Mhm.
bracket to them and their non-existent bracket.
So then
So
they get income, leasing income. Well, so
exactly.
your child, that entity makes the lease payment, they collect the rent or the lease, the difference is income, and that's their income.
Exactly. Yes.
Okay.
And so the only thing you have to worry about a little bit with that is something called the kiddie tax.
Okay.
And essentially what that is, when you have when your child has certain amounts of income,
Hmm.
then that income can be taxed at the parent's rate as opposed to the child's rate.
Okay.
And so you just have to make sure that it is structured properly, and that you're going and sorry, I had those notes there. One second.
Okay.
Um,
So setup's key, structuring properly is key. Maybe pair this with a tax attorney, would you say?
it,
Or not so much?
yes. So yeah, you can, you just want to make sure that and I apologize, I had these numbers and they've now disappeared on me. So I don't know if we can edit this out probably,
Sure.
but okay,
Sure.
sorry.
Yeah, that's all right.
But yeah, so you just want to watch out for that kiddie tax, and to make sure that um uh you're not essentially wiping out the benefit, because you're still essentially having
The
the
tax.
income that be taxed at
Right.
your rate as opposed to the kid's rate.
Right. And
So you
so
want to
to the
consult with the
to
advisor
the
about that.
practice, it's the same expense. Is that right? I mean, whether the practice is paying the lease payment to the equipment, I guess the equipment manufacturer, or the child's LLC, it's the same to them. Is that the part of the point? It's just
Yeah.
who they're paying it to.
Yeah. So one thing is that you do get it out of the business, and so you're separating that liability.
Hmm.
But if you have a child that is, especially if you have an older child that can act as a general partner, then that can be considered or that can be considered earned income as opposed to passive income,
Hmm.
which doesn't qualify for putting money into a retirement account. So you want to just make sure that you have your children acting as general partners as opposed to limited partners.
Okay. We'll have to do a separate episode for that one, but that's an important consideration. Okay. So leasing equipment, sort of putting it in the child's name, so to speak, and then making I get that. Do you find, like, is this a common thing with your clients? I imagine you would suggest this rather often to them, and whether they say yes or no is different, but I would imagine that you would.
For those that have the equipment,
Yeah. Right. Yeah.
majority of our clients, don't have, either they own the equipment, but they don't have the children to really
Sure.
lease it
If they
out
have
to.
kids and the ages
Yeah,
make
if they have
sense, and
kids, they
yeah,
can. Yeah,
yeah,
exactly. Or they're themselves leasing the equipment because it's quite expensive. So
sure. Okay.
yeah.
Okay. Is there another, like a lesser known tax benefit, like example you could tell us about? Leasing equipment thing's pretty cool. Um, I imagine nobody would think of that on their own, but I'm wondering what other examples you have.
Yeah, no, no
No.
other.
Okay. All right. Well, that's a good one anyway. So anybody who's got equipment in your practice, whatever it may be, are there certain types of equipment that don't qualify for this that they should think about? Like I'm working on a laptop right now. I wonder, would that make any sense? I just paid for it, so no, it really wouldn't make any sense.
No, no, not you're looking at, probably equipment that's in like the tens of
Sure.
thousands,
Okay. Okay.
yeah.
What are some good and bad practices to keep in mind when practice owners are thinking about taking advantage of these? Like, for example, we talked about it a bit earlier, but can kids be too young? is one good. And I hear different. There's an account I know near where I live. He's like, look, I've heard about this. Younger than 12, no way. Or just come on, man. Just like this sort of, you know, whether that person was aware of the court tested age or not. But just some things to keep in mind, because things that can sound too good to be true, which some of this could be to some people, just maybe it is. So what are some guardrails and things to keep in mind?
Yeah. Probably the one that I hear the most is, oh, I'm going to hire my child to be a model, and that old,
Really? What does that mean?
there, yeah,
Like,
yeah. So what they've heard, and this is a very, I like to say, antiquated strategy, because back in the day, people would hire their children as models to be part of like their advertising or like on their website,
mhm,
things like that, and they would pay their child a salary for
mhm.
doing the modeling. So that's how they would have it for like their infant child. Um, but nowadays,
Oh my
in my
God.
opinion, that is very difficult to justify because everybody has amazing phones now. Like,
Mhm,
unless your child is out there, going and modeling for other people,
mhm,
I think it's very difficult to justify, let's say, a $7,000 salary for your child's picture being taken once and on your website.
mhm,
Um, you know, you wouldn't pay that to a normal model like
mhm, mhm.
one time. So,
Right.
I that's definitely an area where I say take caution when trying to take that stance on the
Mhm.
modeling.
Okay.
It's better for you to just follow that court tested age is 7.
Mhm,
Just wait. I know, believe me, I'd love to start my children a lot earlier, but
mhm, mhm.
sometimes the juice is not worth the squeeze, if that makes sense.
It does make sense. Okay. Any other things to keep in mind? Good versus bad practices. Talk about the age of the child, paying something reasonable, 7,000 for one shot, picture versus not. What else?
Yeah, the other major thing, we've discussed this already a little bit, but documentation. I mean,
Hmm.
90% of any fight with the IRS is documentation. So,
Okay.
making sure that you do keep those timesheets. It could
Hmm.
even be just a Google sheet or an Excel spreadsheet
Hmm.
of, here are all the things that my kids do on a weekly basis, and these are the
Hmm.
days and times that they did it.
Hmm.
It doesn't have to be a novel. It
Right.
just has to be documented.
Right. Right. Okay. Cool. Well, we've covered a lot. I mean, it's an area. Yeah, I just, maybe it's just me. I don't know, but I'll bet you this is an area where a lot of people don't think about it, or they just think very surfacey about it. So I'm glad we could kind of dig beneath the surface. Anything you think we should have covered, we need to cover, or you'd like to cover that we just didn't get to?
No, I think that we've covered pretty
Okay.
much everything, and it's when it comes to implementing, you just want to be diligent in following all those
Yeah.
steps.
Yeah.
Um, Otherwise, I mean, it's completely legitimate strategy,
Hmm.
and it's a really great way to transfer wealth to your children and start building a legacy for them early on.
Right. Right. In a tax advantaged way. So yes. Um, Where could somebody get started with this? What would you recommend? Let's say we've caught, some listeners' attention. Hopefully we have, and they're saying, this sounds, we should be looking into this, but they just don't know where to start. So where would you recommend they start?
Yeah, talking with your tax professional about it. Hopefully,
Hmm.
they are more comfortable than just
Right.
starting at age 12.
Right.
But there's a lot of great resources out there. Just even Googling it. I mean, this is a
Hmm.
very uh, common strategy, and so there's a lot of great advice out there. But
Hmm.
obviously, making sure that you're going to trusted sources like your tax professional is going to be um, my best advice.
Sure. Okay. Um, yes, make sure they're on board. Um, Maybe get a second opinion after you've heard this, if you're, because for some, just because they're tax professionals and just because some of them are tenured tax professionals doesn't necessarily mean that they've heard of everything, the tax law. I don't know how many volumes of books that would, number one, and number two, that they necessarily Agree, because you've said it's vague. There's gray areas, which means that there's more than one way to interpret a provision in the tax law. And so you want to make sure that they're behind you on this because, again, in the 0.001% chance that you sit down with an auditor one day, you want your tax professional on your side, right? So it's just worth a couple of questions. So good. Alexis, thank you. Our first three-peat for coming on. If we put all your episodes together, getting quite the good tax education, which can be a big difference. Certainly material in success versus not success in a practice. So thank you so much for coming on again.
Thank you, Carl. I appreciate it.
Yeah. And as I've said before, you gave us contact information, which we're going to put in the show notes for this episode. So anyone who wants to get a hold of you now has another way of doing so. And a couple of points before we wrap up. First, if you're someone like Alexis, like Cerebral Tax Advisors or us, you seek to help private practice owners, or if you're a private practice owner yourself, either way, you've got some experience or expertise on the business side of private practice. I want you to come on Practice Care and tell your peers about it. In the show notes for Alexis's episode and every episode, there's a link, a couple of clicks. It's easy. Tell us what's on your mind, and we will get you scheduled as soon as we can. And finally, subscribe to Practice Care. It's one word, Practice Care. We're on Apple, Spotify, YouTube, everywhere you listen to podcasts. We're easy to find. We drop a new episode every week. So subscribe so you can stay up to date. Thanks very much. And until next time.